Hey there, good afternoon everyone. Trader Tim from over at eminimind.com bringing you a Monday market analysis video for the 13th of November 2017. We had a pretty big week in the markets last week in terms of some of the moves that we saw back on the 9th. We had the move down, a retest of the 2563.50s, and it was really important that we did not break that previous swing low. And you can see as soon as we came down to that 50%, the market rallied pretty strongly and closed back up in the positive on the day after the gap down and then the morning's selling. Really, to have that much buying come back in is a pretty good sign for the markets. That there's that level of participation. If I back up a little bit here, we can see this line up here at the 73s, 2573s. That's that negative 61.8 of the bigger daily long that we've been in for quite a while. I'm going to get rid of the extension now, which is a drawing from highs to highs, because we've reached that target. So I'm going to get rid of that. And you can see this blue line here, the trend line that we have pulled back to a number of times now, and doing so last week, and then today with the open a little bit lower, right at the trend line, and then rallying off that trend line once again. So this trend line, even though it's steep, even though we're going, basically straight up, we've had very strong support off that trend line. So a break of this bigger trend line here, this steeper trend line, would be really the first sign of the market changing its momentum, or a bigger potential shift in the market. We can see, we're close to the target on this little daily 50%. We've got a 25.95, and I would just as well round that up to 2600. And this week will be the last full week of trading for the next 2 weeks. Next week we'll have Thursday markets closed, and then Friday will be a half day. I would I've always planned taking Friday off, the Black Friday. There's not a whole lot of activity that happens on Black Friday, but it's likely that we could get a lift up to that 2600 level this week. If we're gonna get there, it'd be nice to see it happen before Thanksgiving rather than just drifting sideways and having more of that uncertainty build up. In the Bitcoin cryptocurrency market, we saw some volatility at the end of the week. Bitcoin dipped down back into the 5,000s, and now it's back up in the upper 6,000s. There's been some talks of potential forks that have sort of fallen apart and not been induced into the market. And so that and some of the things with the Bitcoin Cash versus the Bitcoin sort of the original Bitcoin versus the Bitcoin Cash fork that occurred over the summer, kind of playing into some of that shakeup in the markets. But all in all, things are chugging along pretty good in the Bitcoin market as well. So there's high consumer confidence. We've got a lot of buying power for the consumer. The interest rates are very low. The real estate market is doing very well. Not to say that the end is near, but those are just some of the factors that can really play into the media talking about the end or the top or the bubble. And so just it's okay to participate and to buy into bull markets and bull trends. We just want to be making sure that we are, protecting yourself, and when you are getting into a longer term position, really having that outlook at the start, if your time window is 5+ years, then where you enter a longer term position is not as critical. If you're looking to open a new position in Bitcoin at this point, waiting for some market action like we had on Friday, where we get these $1,000 short-term declines, is a much better opportunity than trying to chase highs in the markets. If we look at some individual stocks, the tech stocks especially, we'll start off with the Nasdaq. This hammer that we had last week on Thursday, very important that we were able to not only break the prior swing low, but recover and close not as a big body candle to the downside. When you have a hammer formation, typically intraday, it almost looks like a V, where the market made a sharp move down, and then the market sort of dries up for the selling, and then that lifts the market with orders that are some new money coming into the markets, but also, people that are sort of trying to make themselves whole again. And so when we look at the bigger picture and the candle formations, just by looking at the candle formations themselves, you can pick apart a lot of the psychological things that are going on with the individual traders that are making up the market. So by keeping your charts very simple and just looking at the candlesticks themselves, you can pull apart a lot of the intraday nuances that can be happening. So even if you're not day trading, there's a lot that you can be able to incorporate on a daily basis to your swing trades. So if we look at some individual stocks like Google, we can see that even as the market has been shaky with these sell-offs, the tech stocks have held up and sort of acted in similar fashion with forming that hammer last week. Apple, looking even with some of the tax alleged claims and different things like that coming out with some of these individual stocks, Apple still remaining pretty strong. If we look at Microsoft, also holding its gap up since its earnings. The other one I like to look at is Netflix, holding on its 50%, but a little bit off of its highs, putting in a lower high, whereas some of these other tech stocks are looking a little bit stronger. Amazon being the fourth, and really being a big level, a big player rather, in the tech space. These individual stocks are still holding up very strong, and so you can look to some of these individuals for maybe a lead on a turn in the market. Sometimes the Amazon, Netflix, Google, and Apple, if they're all trending in the same direction, it has a lot more weight than if one of them starts to fall apart, or like when we saw Amazon trading in this sideways consolidation, we had a lot more pull down on the market. So now with these stocks trading at highs, the likelihood that the S&P can break out into a new high and continue that momentum up towards the 2600 level is very possible. So things are looking good for another good trading week. Days like today, where you have a bullish engulfing pattern, can sometimes be a little bit challenging. We saw the market run away a little bit in the morning without really getting much of a pullback. But that's okay, because that gives us bullish sentiment going into tomorrow's trade and Wednesday's trade. So the fact that we broke above the high of the hammer is very important, and the fact that we've held at not only the 50%, but held above the swing low of the previous hammer is another kind of check mark for the bulls. So we'll see if tomorrow maybe we can open in the middle of this candle and start to break today's high tomorrow, which would also break the high of the hammer, and see if we can start moving up towards the 2600 level. If we do start to roll over, then a break of the swing lows, this 25, 63.50s, and the previous hammer over here at 62.25 would be very, very important levels to watch. And if we do break those levels and start to accelerate in selling, then it's very likely that we could really start to sell off hard, because you have so many people putting on both new long positions and who have ridden this bull market up for a long time. And so if you get new long positions that are getting stopped out, profit taking occurring, and the market sort of starting to break down below the trend line, that's when you see these, big accelerating, big body candle days to the downside. So cautiously bullish, but things are looking pretty good as we start off the week. So you can tune into the live trading session each Tuesday over at emoneymind.com/VIP. And if you have questions, feel free to shoot me an email, tim@emoneymind.com. Thanks. We'll talk to you soon.